Okay, so budget 2025 is over, and first up, Saloni, we have to say that as an investor for your equity mutual funds and stocks, there's really no tax change over there.
Right. But we have to talk about this mega, personal income tax changes announcement and no income tax up to rupees 12 lakh that was said by the finance minister.
Right, but hold your horses, because if you're in the old tax regime, you've sort of been sidelined and ignored again. So if you have been claiming tax exemptions for HRA, medical insurance, life insurance, ELSS, and you're in the old regime, nothing changes for you. What it was last year is the same tax slabs that are applicable for you even today. So this is only for the new tax regime.
But for the folks who have opted for the new tax regime, there has been some major changes in terms of tax brackets and even tax rates. And we're going to put this on the screen for you to understand what exactly changes for you. And that 12 lakh, no income tax up to 12 lakh that I said, that includes the tax rebates as well. So that we need to keep in mind.
Right. But will you believe me, Saloni, if I say that I kind of saw this coming?
Okay, really?
A couple of days ago, if you notice, you would have seen all over the news Prime Minister Modi actually saying that Goddess Lakshmi is blessing the middle class and the poor. So you kind of got the hint that something was on the cards.
Yeah, that's fair, because we obviously saw some tweaks coming after there has been slowdown in the consumption and obviously in the economy as well. And the government had to do something to try and ensure that they need to boost this consumption, especially from the urban class, and also that leads to, obviously driving the economy as well. And over about 60% of our GDP is driven by consumption. So obviously we did need a boost there.
Yeah, absolutely. And we spoke about this in our 60-second pre-budget video as well, right? Where a lot of people were saying how it's going to impact consumption if there are tax cuts. But what you will see over here is consumption stocks today have been on a roll.
Yeah.
The Nifty FMCG index, which is the fast-moving consumer goods index, that has been on the rise. Stocks like Britannia's biscuits, Zomato's food delivery, Blue Star's AC, right? All of these have seen anywhere between a 5 to 10% jump in stock prices today. So there is that big boost that people are expecting.
Yeah, and even auto stocks like Bajaj and Maruti are up in quite the same range.
Yeah, so now if you put me on the spot and you ask me, define this budget in a couple of words, I would just call it a budget for consumption. The government is now saying that they will lose out on 1 lakh crore rupees due to the tax tweaks that they've done. So that's revenue that they're foregoing. And fingers crossed, they and all of us are also hoping that people will now take that savings, in a sort of way, and actually go out in the economy and spend it. And that is going to boost the economy and the country's growth.
Yeah. And as you mentioned, that FMCG stocks have been, rising. So it seems like investors are just trying to hop on these stocks. I just want to state out this fact that none of these stocks are cheap. So beware there.
Yeah, that's definitely something to keep in mind.
Okay, so is infra in the news, because that's where the big focus comes from, the capex part, right?
Well, usually, but this time not quite. And in the past, that has been their focus. And the reason for that is very simple. It's because of something called the multiplier effect, right? Now, government estimates basically say that if you're spending heavily on infrastructure and other capital assets, like roads and bridges and setting these things up, what it does is it creates more jobs in the economy.
Right.
That is the multiplier that they're talking about, and more jobs means more income for people and more spending. So the multiplier effect, essentially government's calculations say that for every 1 rupee they spend, they get benefits up to close to 2.5 rupees out of it, right? So that's the entire multiplier effect, why everyone harps on about capex and infra so much. But this time, if you look at the numbers, their outlay on their capital expenditure is only around 11 lakh crore rupees. So it's not really a big jump from last year. People have seen capex jumping 20% year on year, but this time, let's just say that's not happening.
But, if you think about it, that makes sense, because looks like the government had to walk a tightrope, right? Because they are letting go of these revenue that they get from personal income taxes, right? So making a big push on capex also will obviously give a huge dent to their revenue as well.
Oh yeah, absolutely. Completely agree with that. And that also probably means there's no big news around defense and railways also. A lot of people were expecting that. The allocations here are also, slightly marginally higher from previous years. And if you look at the stocks and indices in this area, you've seen that they have taken a knock as well, right? So investors have reacted negatively to that.
And maybe this is sort of an indirect message to the private sector, right? The corporate sector, for them to at least start focusing and expanding also on their part, because government can't do everything on their own, right?
Yep, and the government has made noise about it before, so maybe.
But we also have to talk about the macro picture here, right? About these fiscal deficit numbers and GDP growth targets. Like,
Yep.
what do they look like?
Okay, so let's quickly explain what a fiscal deficit is for people who don't know. So essentially, the government earns money through, let's say, taxes and divesting non-core assets and things like that. But they also spend a lot of money on, let's say, subsidies for farmers. They spend on infrastructure, which is a capital expenditure that we were talking about. So when the expenses for the government are more than the revenues that they make, there is a deficit. And then they have to resort to borrowings in order to cover that deficit and, make up for anything that they need to do. That is the fiscal deficit. And you typically don't want fiscal deficit to rise too much. It's usually measured as a percentage of GDP, and I'll get to the actual numbers. But you don't want it to rise too much, because then people will be like, hey, the government is not managing the finances of the country properly, right? So it needs to be kept in check. And the Indian government wants to bring it down and said that it will be able to bring down the fiscal deficit to 4.4% of GDP this financial year. And just for context, it had hit 6.7%, a massive 6.7% in the aftermath of COVID during FY22, when there was a lot of spending that was happening, right? So right now at 4.4% target, you can see there's a clear path that the government is trying to follow over here.
But is it not an unrealistic target? Because that's what everybody questions, right? Initially, the government tries to raise these targets and tries to earn this towards the start of the year, but sometimes it does not lead to that.
Yeah, of course. And we were listening to some of the experts on the various media channels, and most of them seem to be on the same page that this seems to be a fairly well-balanced budget, and the government has not gone overboard in estimating too many revenues and things like that. And if you actually look at the numbers, if you look at the budget documents, and you'll see it on screen, you'll see that they're estimating only an 8% increase in the total receipts for the year. And that doesn't seem too far-fetched on the face of things, right? So the bottom line is, it does seem to be a case where the budget is fairly conservative and the government has not gone overboard with anything.
Yeah, so far so good, I guess.
Yeah, but again, you'll have to wait and see. So the government, like you said, right, there is this tightrope that the government is trying to walk on over here, right? Balancing capex with the consumption boost. But I also told you about the multiplier effect. So you have to now wait and watch if the revenue that the government has foregone in terms of taxes going into the hands of people for consumption, whether that can actually boost the economy the same way that capex could have. Or would the government have been better off maybe putting some money into capex, or more money into capex as well, right?
I think only time will tell us that.
Absolutely. All right, now moving on, let's talk about some of the other announcements that have been there in the budget, Saloni, and how they have affected some of the sectors.
Yeah, I mean, coming to sectors, let's start with agriculture, because that's how even she started her speech, right? They've announced a national mission for high-yielding seeds and even climate-resistant seeds, and also a 6-year mission to achieve self-sufficiency in pulse production as well.
The Atmanirbharta angle for pulses.
Right. I guess that's pretty much needed, right? Because India's import of pulses doubled in 2024. So all this focus on seeds has naturally given a boost to companies in the space, and ones such as Kaveri Seeds and Mangalam Seeds, they rose around 5% today after the announcement.
Interesting. And there seems to be some noise in aviation as well, right? There's this modified Udan scheme that they've announced, where the government has said they want to improve regional connectivity to 120 new destinations in India in the next 5 to 10 years. And immediately, Indigo's share price has jumped by 5% too.
But all this sounds very good on paper, right? But we know that there's some issues with the Udan scheme as well. Airfares obviously have not come down. They are still pretty much high. And there are airports that have actually shut down before even getting started.
Yeah, so like with most things, the execution is going to be a key over here.
You know, there's insurance also. I'm looking at the stocks like HDFC and ICICI Life. They've been through this roller coaster today, right? Down 1 minute and up the next. So what exactly is happening in the insurance space?
Well, let's try and break it down to 3 things very quickly. Number one is the government announced the FDI, or the foreign direct investment in insurance, will be up from 74% to 100%. So overall, that's a positive for the industry, because more players could come in, more foreign players could come in. But it could also, experts say, it could also lead to more competition for the listed players, right? So they went through a bit of a negative, patch immediately once that was announced. Secondly, what you have to remember is, as we spoke in the beginning, all these tax tweaks and reducing income tax is only for people in the new regime.
Right.
The old regime had exemptions you would get if you were buying health insurance and life insurance under sections 80D and 80C. Those sections are not there under the new regime. So if more people migrate to the new regime, if this is actually more attractive, will they or won't they consider insurance to be part of their tax saving too? They don't need to. So that could be a blow to the growth of insurance companies. That's one worry that is there. And thirdly, there's also the part that appeared in fine print about ULIPs or the unit-linked insurance plans. They're one of those insurance plans that mixes insurance, life insurance with investments. And up until now, what was the regulation was that if you are an investor and you were investing a premium of more than 2.5 lakh rupees in a financial year, the maturity proceeds or what you would get as a payout from that market-linked returns, that would be taxed as per your income tax or tax slab, your marginal tax rate. But now in the fine print, it says that it will be treated as equity taxation too. So just like stocks and equity mutual funds, if held for more than 1 year, it's a 12.5% tax on the capital gains. It would be a capital gains tax and not an income tax as as you would earlier see it. So I think that's again been a bit of a positive for the insurance stocks because it could lead to a boost in the ULIP business. And again, investors have digested that and send the stock up again towards the end of the day.
Right. Now, we know there's so much she spoke about and so many things to cover, especially, in the power and new energy sectors, but we'll obviously cover it through next week.
Yeah, so unfortunately for the video, Saloni, we have to stop here. As much fun as we've been having dissecting this budget 2025. We hope all of you have enjoyed listening to our brief explainer on what we think are the most important things that were covered in this budget. And hopefully we'll see you next year again for another special edition of Budget 2026. Till then, see you.